So you're ready to start investing, but not sure where to start. Don't worry, I've got you covered. Today I'm going to talk about how to invest in ASX shares, in other words, in Aussie stocks. The ASX is the primary stock exchange in Australia, where you can buy and sell shares of publicly traded companies. It's home to some of the biggest and most successful companies in Australia, such as Commonwealth Bank, BHP and CSL. In this video, I'll walk you through the steps of how to invest in ASX shares, the minimum investment required, the fees you need to pay, and how to buy shares online. So let's get started. But first, this video is sponsored by eToro Australia, now offering zero commissions on Australian ASX shares. With eToro's multi-asset platform, you'll have access to a wide variety of investment options, including stocks, crypto, ETFs, currencies, and more. Buy fractional shares from just $10 USD, plus instant deposits and withdrawals. If you're new to investing, practice risk-free with the virtual 100k demo account. And just a small reminder that this video is not personal financial advice. Always do your own research and think about consulting a professional before making an investment decision. Step 1. Get to know the ASX. The first step is to understand the ASX and how it works. You can think of it like an online marketplace where Australian companies sell their shares to investors like you or I. Those investors will then trade those shares with one another on the exchange to make a profit. Like other global stock markets, the ASX is open for trading Monday through Friday from 10 a.m. to 4 p.m. Australian Eastern Standard Time, so any buy or sell orders you make outside of this time won't transact until the market opens again the next day. When you invest through the ASX, you might notice there are two types of stocks: CHESS or custody model stocks. CHESS sponsorship just means that your share ownership is registered by the ASX itself and you get all of the benefits of owning shares, such as dividends and voting rights. The custody model is where the broker holds the shares on behalf of the investor. This is the most common system globally. The benefit of going with this model is it can give you more flexibility in terms of how much you can invest at any one time. For instance, with CHESS stocks, you need a minimum $500 in any company you buy stocks in. With the custody model, you can start with as little as a few dollars at a time, depending on your broker. Which takes me to my next point. Step 2 is to choose a brokerage account with access to Australian stocks. Some brokers only let you trade US stocks, so it's worth checking this before you sign up. And remember, some will be CHESS sponsored and others will be custody. When comparing your options, also consider the fees, trading tools, and customer support offered by each broker. Step 3, pick your stocks. Once you have chosen your brokerage account, it's time to start selecting the stocks you want to invest in. Choosing your stocks can be the most challenging part of the process, but it's essential to select stocks based on your investment goals, risk tolerance, and financial situation. When it comes to stocks, think about the industry and sector it's in, its financial performance, whether it pays dividends, its future goals, and who's managing the company. Alternatively, if you want to invest in multiple stocks at one time, think about investing in an Australian stock ETF instead. Step 4. Order your stocks. Okay, once you've chosen your stocks, it's time to order them. Log into your brokerage account and enter the details of your trade, including the stock symbol, the type of order, and the number of shares you want to buy or sell. There are different ways to order your stocks. There are market orders, limit orders, and stop loss orders, for instance. The market order is an order to buy or sell a stock at the current market price. So that means market orders are executed pretty much immediately if the market is open. But if there's volatility, the price you pay may not be the price you expected. A limit order is an order to buy or sell a stock at a specific price or better. If the stock's price does not reach the specified price, the order will not be executed. Keep in mind that the minimum investment required to purchase ASX shares is typically $500, but you can invest from just a few dollars at a time, depending on the platform you choose. And trade settlement is usually T+2, which means that the funds will be withdrawn from your account 2 days after the trade is executed. And it's the same process, but in reverse when you decide to sell. Investing in ASX shares can be a great way to grow your wealth over time. Remember, investing involves risk, and it's essential to do your research, understand your risk tolerance, and invest based on your financial goals. Today we've covered the basics of how to invest in ASX shares, but there's definitely a lot more to it. So if you'd like to understand more about how trading platforms work, dividends, ETFs, and the ASX, Check out the links to some of our guides. And if you'd like to know more about the sponsor of this video, eToro, I've also left some helpful info in the description. Keep these steps in mind as you embark on your investing journey. Thanks for tuning in, and we'll see you next time.